On Friday morning, the S&P traded down almost to the 5,600 level before bouncing and rallying the rest of the trading session. Friday was the monthly options expiration for the month of March, and it did not disappoint in terms of volatility, dropping 1% before rallying and making up most of those losses. The 5,600 strike has been an important support and resistance level going back for the past couple of weeks, and so no surprise that we bounced right off that level. We saw big volume at the 5,650 as well as the 5,700 level in the options chain, and even though it doesn't feel like it, we basically went nowhere last week, chopping around a little bit, but basically closing slightly above where we opened at the beginning of the week. So this bottoming process that we've been seeing occur over the last couple of weeks out of our lower dealer cluster zone on the S&P so far is holding. We had somewhat of a double bottom here, and even though volatility remains, so far the lows near this 5,500 strike are holding. Switching over to a view on our daily chart, we mentioned this whole moving average, which is this yellow line, and throughout this downtrend, the daily candlesticks have been below this whole moving average the entire way. Basically for 3 to 4 straight weeks, we have not breached this whole moving average until 6 trading sessions ago. We broke out above that whole moving average and have been above it ever since. The whole has now turned upwards, and that is somewhat of a bullish sign as long as we can maintain above that, technically speaking. We are still in negative gamma exposure territory, so all this gamma exposure that you see highlighted by these purple bars represent absolute gamma exposure, but this is all below our 0 GEX line. So this is all negative gamma exposure, and we've been mentioning the importance of this 5,700 level. I think we need to get a couple of closes above 5,700 to have an increased probability of moving into positive gamma exposure and potentially seeing a sustained bounce to higher strikes. I do think it's notable how much volume came in during Friday's trading session at the 5,700 level, over 150,000 contracts. We also had over 100,000 contracts traded at this 6,000 strike. And a lot of times in the past, when we've seen this big outlier volume at a strike price way above where we're currently trading, this has been a precursor signaling a move towards that strike price. So it's a little too early to tell if that's the case here now. However, I will say if we continue to see these big volume numbers coming in at the 6,000 strike over the next week or two, this will continue to add open interest at the 6,000, which will increase the gamma exposure at this level, which could potentially increase the magnetic effects to that level. So that is something we are watching very closely. If you're interested in tracking data like this, definitely check out our community Discord. I'll put a link down in the description below. In terms of the total net gamma exposure, we can come down here to our gamma exposure data graph. Total gamma has really reduced from a negative stance. We were approaching negative 2 billion on the S&P 500 at one point, and now we're only negative 585 million. It's going to be interesting to see when Monday morning opens up and all of those contracts are wiped away from the March 21st OPEX, what total GEX will look like going forward. And so we're entering a new option cycle heading into the April 17th monthly options expiration. And so it's going to be really interesting to see how the options chain resets going forward. Moving over to the Qs, we closed at 480.84. If you recall, we've been highlighting over the last week and a half the importance of this 480 level. And I think the fact that we closed above 480 on Friday is pretty significant. As of the close on Friday, 480 also represented the 0 gamma exposure level. Key level, in my opinion. I think if we can maintain another 1 or 2 trading sessions close above 480, this could potentially bode very well for further upside in the Qs. The Qs, like the S&P 500, is still in negative gamma exposure territory, however, with most of the GEX data sitting below where we are trading right now. And so that is something to be cognizant of. Switching back to our daily candlestick chart of the S&P, I also wanted to highlight this trend line, which we have tagged 3 times now. This is going back to April of 2023, this was August, and this was just a few trading sessions ago, bouncing right off of this uptrend line that is going back for nearly a year now. And so this zone around 5,500 to 5,700 has multiple confluences of support, both a trend line, gamma exposure data. We've got a lot of option volume coming in at around these levels as well. And we have multiple technical indicators turning positive as well that we're watching. So a number of different factors here that are pointing to the potential of support at this level. So I just wanted to point that out as well. Next, let's take a look at a few names we've got on our watch list. First, we'll start off with CrowdStrike. CrowdStrike having a down day on Friday, down 1.84%, closing at 362.24, having a little bit of consolidation over the past week. Earlier in March, we actually traded an out-of-the-money call debit spread, buying the 340 calls and selling the 360 calls. This is back when CrowdStrike was trading in the 320 zone, and you can see that it actually dipped below our lower dealer cluster zone. So it was quite an extreme move from the top, going basically from 460, 450, 460 all the way down to nearly 300. And this is actually our post in Discord from last Monday, where we exited the trade, locking in this 340, 360 call debit spread in our Geek portfolio. And let's just take a look at our initial post as we decided to enter the trade. We posted this on March 7th, and this is actually what the setup looked like at the time. It was looking really nasty on CrowdStrike. We were coming into our lower dealer cluster zone. As I mentioned, we did dip further below that, so we were a little early to this trade, but we felt like the number of factors adding to support at the 300 to 320 level was quite significant. And this is still a name that we are watching for another potential entry. We've been watching the gamma exposure at the 400 strike that has been maintaining over the last several weeks. This 400 level also corresponds with previous resistance, as we saw as we dropped down here in this sell-off. This was ultimately tested multiple times before failing, and I believe there's a good chance that we could potentially test that level again in the coming month or so. So this is going to be a name that we're looking to play an option strategy on in our portfolio heading into the April 17th OPEX. We think from a risk-reward standpoint, if we can find an out-of-the-money call debit spread or potentially an iron butterfly targeting this 400 strike, that would make a really great, relatively low-risk, high reward type of setup. And again, if you're interested in following along with all the moves we're making in our own portfolio, consider becoming a member, geeksoffinance.com. You can join there and get access to all of our tools and analytics, as well as see what we're doing in our own portfolio. Next, let's move over to Tesla. Tesla trading just under the 250 level. Big up move on Friday, up 5.25%. Really been bouncing off of this 220 to 225 zone over the last week or so. Even though the largest gamma exposure concentration is at the 200 strike, we haven't made it down there yet. A break below these recent lows, and I think 200 is very likely to get tagged. We're playing for a move down to this 200 strike in our portfolio. We put on a put debit spread, out of the money put debit spread for relatively inexpensive late last week, and this position actually fits pretty well within the context of our overall portfolio, giving us some more exposure to the downside in the case that Tesla should continue its sell-off. And we've seen quite a huge sell-off, of course, over the last couple of months. The only thing I will note is that on the upside, we do see gamma exposure growing at the 300 strike and the 400 strike. We have just rolled over the March 21st OPEX, so the big monthly options expiration for March just passed, so that could also see a shifting in the options chain to the upside with a lot of those put contracts rolling off. And so we'll have to monitor the options chain heading into next week, like I mentioned before, to see if there's a big shift that could change the dynamic for Tesla. But as of now, we are playing for this 200 strike. And if you're interested in accessing our gamma exposure dashboard and our option flow analytics tools, as well as our algorithmic trading strategies, which we've just added into our platform, you can actually add the signals directly in your gamma exposure charts and get notifications when those signals trigger. We also have full backtest results for each algorithm that we've tested, and members get access to all of that. By the way, we are running a special promotion, $300 off our yearly portfolio manager tier subscription. Use code SPRING2025 at checkout. We have a few spots remaining, so definitely take advantage of that while you can. Members also get access to our community Discord and all of our premium channels. You can see exactly all the moves we're making in real time, and we've got a ton of great traders in there sharing their own ideas and trade setups as well, something you definitely don't want to miss. Link in the description below. Thanks so much everybody for watching, and we'll see you guys in the next video.